Good evening, folks. We're just going to take a quick look. It's going to run through my harebrained logic when it comes to what I'm doing on intraday. Also, what it is that I do just kind of on a regular basis, which is essentially across all time frames, and where the school of thought is coming from when it comes to the type of discretionary trading that I involve myself with. Um, so identifying trends is one of the number one things that I do, right? Operating over or under a control price, the relative importance of, whether it be intraday, whether it be swing trading, whether it be long-term trading, that the the importance of having a control price and where a control price comes from. So there's a couple of schools of thought. One of them is Mark Whistler. There's some information in the resources. Mark Whistler wrote a couple of books on volatility theory. Um, the guys over at Shark Charts do volatility theory, but they have much more elaborate indicators. Um, I don't know that I ever really. It's not that I didn't find success with volatility theory. It just there was something about volatility theory that really bothered me, and that's why I think that I really sort of married volatility theory with price action theory. Um, I like that a little bit better, uh, and it also helps me to be a patient trader, and I'll explain that a little bit more in depth here in a second. So this will be part one because for whatever reason Discord is 100 meg upload. I don't have larger video uh, data that can be stored on there. So so back to the schools of thought. So Williams indicators, price action theory, price action breakdown. I think that's Lorenzo Demir, um, and Mark Whistler's volatility theory. That's where we derive the 1.25 deviations. So 1.25 deviations from, if you want to call it a linear control price, means that that 1.25 deviation is going to contain most of our data. If we're operating outside the 1.25, these are either highly valuable high value areas or low value areas on a channel, depending on your time frame and depending on how you're trading or what you're trading. So let's dive into this. So I have been trading quite a bit more on the intraday level, and this can seem relatively confusing. So fourth person is the moving average theory kind of guy, volume weighted average price. That's a Brian Shannon thing. The anchored volume weighted average price is something that I pay attention to quite a bit. Okay, we do not have, so volume weighted average price is just, this is a built-in TradeStation thing, right? This is an estimate of volume weighted average price, not the anchored volume weighted average price that Brian Shannon uses. So here's this swing, right? We're looking for pivots when it comes to the anchored volume weighted average price, and I always have the 5 DMA usually on most of my charts here, right? So let's just take this pivot for instance, and let's slap on, I've got chart trading enabled here. I've got to disable chart trading or else I'm going to be taking trades while we're talking, and we're not doing that right now. So let's turn off chart trading. Can we slap on an average without this thing barking? Okay, we can. Let's take that off. Let's go with the shift. Okay, so here's your volume weighted average price, and here is this all important pivot for the session low. This is what we pegged, and lo and behold, it's pretty darn close to the volume weighted average price for the session. So the session volume weighted average price starts back here. I have been doing volume weighted average price on a day-to-day basis. So just following along this session estimated volume weighted average price. So this looked pretty good, right? Here's the volume weighted average price for the session, and we can see that we are staying above this volume weighted average price. This is helping us to determine which direction the market is moving and where the buyers, where people are coming in, where market makers are coming in and spending their money. And we must have known, right, that buyers were looking to get into the market today and take some liquidity. Let's get the full session right across the screen here. So for whatever reason, market makers are looking at this volume weighted average price from this anchor on the day, and this is where a lot of the buying was happening. So 1.25, let's look at 1.25 deviation and why I think that 1.25 deviation is so important. And again, this is Mark Whistler theory. So you can go into Mark Whistler's stuff and he explains this. There's a whole school of logic that goes along with 1.25 deviation. So here is that 1.25 deviation from the control price, and we're gonna mark this off because we need to. That's the upper 1.25 from the volume weighted average price for the day. Here's the lower 1.25 or negative 1.25 deviation from the control price. So if we look at, is there a way? Let me see if we can do this. Can we? I was hoping to get like a paintbrush here, but that's not happening. Oh boy. Let's do something else here. Let's look outside the 1.25 deviation. So outside the 1.25 deviation, there is considerably less data outside the 1.25 deviation. And I think we could probably agree on that. So the theory is that most of the trading data will be contained within the 1.25 deviation. This is just kind of giving us an idea that in order to push outside of that 125, the market is going to be tilting in one way, in one direction or the other. It's difficult to break outside of this 1.25 without a lot of force, right? So there's got to be a lot of force to break outside of this or direction. So, and then here's that 2.25 deviation. So the numbers go, and I can't remember the exact numbers, but most data would be like, I don't know, in between 70 and 80% of most of the trading data will be contained within 1.25 deviations. From 125 to 225, it's, whatever it is, 75 to 85%. And then from 2.25 to 3.25 is the rest of the data. But it's much less, right? There's less data the further you push out because the market requires energy to push outside of there. If we are pushing these, 2.25 deviations from the control price, and in this case the volume weighted average price, which is this pink line here, this magenta line here, this is realistically our control price. So it follows the same theory as price action. We think that buyers will be, if the market is trending higher, is trying to trend higher, and this is why we put in some volume theory too, right? We're trying to find out where the money is going. So we continue to push 2.25 deviations throughout the entire session. So this is letting us know where our proverbial high value and low value areas are in the session, the better opportunities to be a buyer. And I emphasize that on my other charts, right? 2.25 deviations, 1.25 deviations, so important to find a control price. Think of the volume weighted average price as being your control price, right? Here's your control price here today, and we're following this control price. This is where people are the most interested because the market is attempting to trend higher, and then so the theory is if we break back into a 1.25 deviation and you have a relatively strong control price, something that the market is, we're trending a little bit higher, that once we break out of this 1.25 deviation, so we tag this 2.25 up here, right, that we will return, this is volatility theory, we will return to this control price, pink line. And that seems to be true for most of the day. So we're trying to break out of this, but volatility theory says that once we do break back inside, generally speaking, this is Mark Whistler's words here, is that we will need to go back to the control price to reassess, I guess, to find whatever it is, find buyers, find sellers, depending on the direction, that we will come back in and we will meet that. Not all times, right? So we did break out of here briefly, tag that 2.25, and we did come in and meet. So we had a hard time. There was a lot of strength in here, at least through the session, right along that 125. We did break back in, but the strength of the market continued to push this higher, and this is when we saw this morning that hey, this liquidity is being taken. Okay, we've got to start another video here for part 2.